When it comes to SK Hynix, then, we are now scrutinizing their HBM lead because Samsung seems to be catching up at this point. We have Samsung earnings this week as well. What are your expectations about this competitive dynamic?
Mm-hmm. So Samsung Electronics has done a great job in narrowing the technology gap with SK Hynix, and I would say that now on certain aspects they might be a little bit ahead of Hynix. So as Samsung was the first supplier to start HBM4 shipments to NVIDIA, like back in 1Q, Hynix just started shipments only in the late 2Q. Also for HBM4E, Samsung has already submitted, its samples to customers a couple of months ago. So it seems that Samsung is now doing a great job, and this is reflected in the company's guidance. Samsung is expecting its HBM shipments to increase by nearly threefold this year, compared to Hynix shipment increase of about 60 to 70%. Of course, we are talking different bases here, so it's not directly comparable, but we expect Samsung to gain share in HBM market in the coming 2 years.
Check.
We've heard that Samsung might be also thinking about listing in the U.S. Given the lessons from SK Hynix, what can we expect?
What up, y'all? It's the KRISTOPHER. This is KW Podcast. KW speaking here. Let's hop in real fast because we got about 20 minutes until the market opens for tomorrow. It is 6:40 p.m. right now, Central Standard Time. Right now it's 7:40 a.m. in Beijing, China, and 12:40 a.m. in London time. So let's hear what's going on. There's a lot going on with Samsung and SK Hynix in South Korea. Check it.
Maybe company might consider this, and I think it.
Otra vez.
C has a plant there. We know that Tokyo Electron also operates there. When you have natural disasters such as this, are they meaningfully impactful for these companies? And what does this mean for the supply chain in the next few weeks?
So I still need to get the full details, but as far as I know, if companies' production is impacted, then definitely there could be some short-term impact on the overall supply chain. But in the past, we have seen that such impact tends to be very short-term, and there might be some production disruption lasting from a few days to a week. It really depends. So I'm not fully up to date on this situation currently, but I would expect any disruptions to be short-lived.
Yeah, we'll be watching the developments around the earthquake region. Sanjeev Rana, really great to get your insights on the semiconductor space, head of Korea research at CLSA. And we're watching some of these stocks at the open here in Japan in about 20 minutes time. AI-related names face further pressure as concerns over capital expenditures and valuations intensify. Of course, we have been talking about SK Hynix in South Korea, but here in Japan, we're also watching the names like SoftBank, memory giant Kioxia. We've been watching ADRs of the OpenAI investor SoftBank overnight as well. Chip suppliers, including Tokyo Electron, for example. Tokyo Electron operates a plant in Kumamoto Prefecture, which was, of course, hit by that massive earthquake here in Japan. So we'll be watching any disruptions in that region, Heidi.
Sherry, earnings in Australia also
Massive
in focus,
earthquake
with
in
Woodside Energy
Japan.
narrowing its production forecast for the full year. And of course, the world's biggest iron ore producer, Rio Tinto, posting a rise in first half profit thanks to stronger commodity prices. Bloomberg's Paul Allen has more on this. And really, beating some of these concerns over the war, over the tariff war as well.
Yeah, good set of numbers. They beat analyst estimates. Net profit up 47% on year, $6.85 billion for underlying profit as well. A very healthy interim dividend too, $2.11 a share. So that's effectively a 50% payout on underlying earnings. Going forward, maintaining all the guidance on sales, output costs as well, but costs still a big focus for Rio Tinto. And we heard from the CEO Simon Trott a moment ago in the media conference saying Rio's going to be relentless.
Things seem rather calm.
Productivity benefits. It's also are going to look for more significant cost savings. And already the company's been slimmed down under Trott's leadership, divestments of $5 billion forecast for this year. But if we look into some of those key commodities like iron ore, still the biggest revenue earner for Rio by far. Prices have held up pretty well, expected to continue doing so. Costs, though, rising as well, largely thanks to the war between the US and Iran. But that's also having other benefits for Rio Tinto. I mean, aluminium prices very, very strong because of all the disruption in the Strait of Hormuz.
It's aluminum.
Copper prices holding up well as well. But there are some question marks around the copper story in terms of where this extra production is going to come from. We heard that there's going to be a ramp up in production from the Oyu Tolgoi mine in Mongolia, but after that, well, we'll be awaiting some more news. But in the meantime, shares for Rio Tinto, they're doing pretty well as well, up about 8% year to date.
We also had Woodside numbers out as well.
Yeah, that's right. Production numbers from Woodside. We'll get the full earnings, the first half earnings result in about a month's time. But sales revenue, very healthy, up 28% on year, $4.19 billion, as you would expect in an environment of elevated energy prices. Production, meanwhile, over the same period, contracting 18% to 41.3 million barrels of oil equivalent. Going forward, Woodside's narrowed the range of its production guidance, but it's still towards the centre of what it had previously said, about 174 to 185 million barrels of oil equivalent, and a whole series of updates on a number of projects, including Scarborough, now 98% complete. This is off the coast of Western Australia, still scheduled to deliver its first gas towards the end of this year.
Bloomberg's Paul Allen there, and we'll be taking a deeper dive into Rio Tinto's earnings print, the strategy up ahead with CEO Simon Trott as the company continues to push its core growth strategy in copper. Do stay with us for that exclusive conversation. Paul and I will be chatting with him at the times on your screen. More ahead here on the Asia Trade. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Well, property firm Hong Kong Land has reported an 11% year-on-year increase in underlying profit in the first half and now projects a full-year upgrade. Bloomberg Intelligence noting that recovering central office prices supported by Hong Kong's IPO resurgence and a flight to quality are helping drive that growth. Joining us exclusively now is Craig Beattie, who's the CFO of Hong Kong Land. Craig, great to have you with us, and some pretty robust numbers there. How do you feel about those, particularly when it comes to the momentum being able to be sustained going forward?
Good morning, Heidi, and great to be here. And I'm really pleased with our results in the first half of 2026. I think to see Hong Kong Land return to earnings growth up 11%, but up 14% on earnings per share. And not just our earnings, but also our property valuations have increased in the first half by 3%. So I think the positive momentum that we've seen in Hong Kong and also Singapore is laying the groundwork for a recovery for Hong Kong Land.
What about leasing momentum? Do you expect that to be sustained, or is it sort of still a situation where we'll be seeing a bottoming out towards the end of the year?
Look at that 1% move in rates on
No, we've seen solid recovery quarter on quarter in terms of demand for prime central office in Hong Kong. What we saw 12 months ago was the market start to bottom in terms of rents for central. And then we saw that start to turn into growth at the end of 2025, and that momentum is built throughout the first half of the year. So actually, we anticipate that growth momentum to continue throughout the rest of this year and then through 2027.
The third surge is straight up.
For Central in particular, do you expect
no
further
volatility.
occupancy
It's just
increase,
like a linear move
rental
right
income
there
to increase as well for the second half?
So what we're seeing right now is really high occupancy levels in our portfolio. We've got 4.5 million square feet of
NASDAQ dragged it down, but overall still
in
up.
central Hong Kong. We're close to 95% occupied.
Europe, green,
we're seeing
Asia,
the narrowing of rental reversions in office reviews. And because of the rising rents in the market overall, it puts Hong Kong Land in a really good position to capitalize on that. And what you should expect to see is our rental income for a Hong Kong office start to stabilize.
Japan was down roughly, but
after a more challenging period of about 5 years. And we're anticipating growth to start to come through from 2027 onwards.
What sort of trend are you observing when it comes to the luxury space? When it comes to spending, is it sort of more locally based? How's the tourism aspect as well?
So right now they're just doing like mundane interviews because ain't nothing going on. So when nothing's going on, then the market just melts up. It just kind of starts hovering up. So that's when you want to be long. But that's good news for our portfolio, for our calls, because that's exactly what we want to hear. This breakout trade that I've been calling for a while now looks like it's on the verge, but it could reverse, y'all. And you can see how many times it's reversed at this point here, but then it's come back. So there's a lot of pressure here, and eventually it's going to give. I mean, just one. So like a triple, it's called a triple top, or double top, or triple top is usually a bearish reversal sign. But when you got 1, 2, 3, here's 2 here, it's kind of hard to tell, because I'm using Heiken Ashi as the charting, and it averages out the daily, we're on a daily chart, so each candlestick is a day, so it averages out those days there. But anyways, got 1, 2, 3, 4, 5, 6 now. Remember I said in the cup and handle pattern, and these things don't always work out, y'all. It could always go the other way, gotta be fair. But I mean, fundamentally, like big picture, the ceasefire seems to be persisting, hopefully. Plus, I mean, it's already been baked into the market already. It's been priced in. So I don't really see much more going on there. And so we still got a lot of stimulus slushing around in the system. We've got, I think it's like $19 trillion of foreign direct investment pledged already. And a lot of it's already come in to the United States. I mean, that's huge. If you just take the taxes on 19 trillion, that's how much money that we're going to get in taxes as a government. And then you multiply that, because when new money comes in, then that money gets invested and buys goods, services, pays for employees, who then take that money and then pay their employees, buy goods for themselves, for their household, who goes to retail stores, who then go and pay their employees and then buy more goods, and it multiplies. That, just do a Google search, anyone, and leave me in the comments. And if you do, I'll send you one of my hats if you can answer it right, or come within the ballpark. And basically, how much taxes does $19 trillion of direct foreign investment provide for the U.S. government? It's more than enough. Let me give you a hint. It's more than enough to balance the budget, something we haven't done since 1970 something, basically since I was born. Our politicians have been screwing around for 40 years straight. And this is probably the one point that both political sides agree with, is that our politicians, both Republican and Democrat, just happens to be more Democrat, but Republicans, the rhinos, are just as bad too. Do nothing doing, I mean, we got to pass that Save America Act. Every other country, well, not if us American citizens went and tried to vote in China or one of the countries in Europe or Brazil or Africa, they'd laugh at us. Be like, you're not a citizen. You can only. How is it a controversy that only a citizen of the country to which they are citizen of should be able to vote in that country? Like, you're going to dilute the voice of your own people as a politician? That's completely contradicts your entire existence as a job. And then promote it? I mean, blatantly? That should be grounds for treason. I bet in most other countries, if you try to get non-citizens to vote in your country as a politician, you would get in prison for that. That's like highly illegal normally. And normally, I mean, look, it's just common sense, you know? Like if you're say your family, say you live in a neighborhood that has a homeowners association and you're a member and all the homeowners get to vote on whether or not they're going to allow an increase on the homeowners fees. So your homeowners fee was $200 a month. Now they're going to raise it to $800 a month. And so you go make your votes. All the homeowners say no, but all of a sudden they come back and say, no, we had some other votes come in. They're like, what? All the votes come in? No, we had some non-homeowners. They voted. So now we're going to raise the fee. And they're like, oh, heck no. How is a non-homeowner going to have a say in raising the fees? See how unfair that is, people? I digress. But anyways, as long as we don't have any like breakdown civilly, this is probably going to go up, up, up. And AUDJPY is highly correlated to the stock market. So remember I said in the prior videos, you can you don't, if you don't trade Forex, most people don't. Currencies are a whole different animal. But if you understand the currency, you understand the whole thing. And that's why it's great as an indicator. And that's why I'm providing signals on the KW podcast. If you're new here, by the way, don't forget to like and subscribe. Let's just get that out of the way, because after you get done with this video, you're going to want to take action. You might forget. We're never too busy for referrals. And also I can use all the help I can get, because I'm sure powers that be out there probably have it out for me since I make all these comments. But I can back them up, though. I can tell you that. I'm right. Check my ass to can't cash. And but anyways, so you got to be fair. Past performance doesn't guarantee future results. So a pattern like this doesn't necessarily mean it's going to go up. It could go down. And I've recommended CWeb, yen, C as in Charlie, Wesley. Let's see, WEB. So Charlie, Wesley, Iglesias, Brian, and then yen, YINN. I'm just going to read. Riot, RIOT, MISTR, BABA, TNA, TQQQ is a really good one. That's the NASDAQ triple leverage. So leverage adds additional risk. So these triple leverage funds strive to do 3 times what the deriving index makes in them. But usually they take a bit of a haircut, about 10 to 30%, but it's worth it, because otherwise to get leverage, you have to open a margin account, which brings on an additional risk of a margin call. And so many times has it dropped just to have it come right back the next day, and then you miss that. Your account would have gone right back to where it was, but you got margin out. But in the ETF, as I advise people consider using for investments like this, you don't have to worry about getting margin out. And I don't know how many times that's happened, more times than anything. I think in like over time, more traders have gotten their butt handed to them because they use margin. And so, yeah, you can get 20 times margin with a margin account. With options, you can get 20 times margin. But I mean, just triple margin, 3 times leverage instead of 20 times. Just 3 times is already enough to get yourself in trouble. 20 times is playing with dynamite. I mean, it makes sense when you're dealing with currencies. Currencies move very small amounts. So 20 times is really like, a currency, you got to do it 50 times to really make some money. And but you can really get your hammered on it too. You could be upside down on it. And so you got to keep that in mind also. But if you're someone who's new to investing using ETF and don't invest what you can't afford to lose, that's probably the best way. If you ask yourself, if you lost it all right now, are you going to be out? Do you have emergency reserve? Are you covering your basic expenses? Don't invest money you can't. In speculative investing like this, you can't afford to lose. That's the rule. And so remember, the number one rule is to remain humble. 2, consistency. 3, watch my videos. No conflict of interest there, y'all. None at all whatsoever. But it does have an element of truth to it. Because if you rely on me for a trade signal, then it would probably be becoming of you to continue watching my video so you know when to get out or add to the trade. So yes, there's a conflict of interest in me advising you to watch my video, but also the conflict of interest after full disclosure is mitigated is worth it, because then you can avoid losing money by watching my program here. Enough said. We got, it's opening right now, 7 o'clock. Let's check it out. Boop, boop. Okay.
It doesn't work. That's just not happening.
And you still need to hire the young people.
And you still need to hire the young people. Yeah, because all the boomers retired. Us Gen Xers are holding down the fort. Otra vez, come on.
Right. What we see in our data is the consumers are spending. The consumers means the rest of the markets and the construct and the final demand is there.
What are the potential thresholds that could potentially stymie some of the pipeline?
People are borrowing because they see opportunity, whether it's equipment buying, whether it's hiring, whether it's building a plant, whether it's inventory buildup.
It's stymie, not stymie.
Live every weekday.
Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
You see, they hired David Gura. Anyway. All right, y'all. What up, y'all? It's the KRISTOPHER.
This is the
KW
Trade
podcast, baby.
Down to Asia's major market opens as we're watching that AI
Talk to us,
selling
Sherry.
continue that rotation out of.
Otra vez. Come on.
A reaction here across Asia to SK Hynix earnings expectations, and of course throwing the variable of Iran-U.S. tensions, not to mention central bank decisions, and you have fireworks this week.
Fireworks.
I'm still shaking my head at the sentence that a 557% quarterly profit has managed to disappoint expectations, but that is really kind of the excessive world that we find ourselves in. And it's an interesting time in the space, isn't it, Sherry, with the AI bond binge coming at a time when there's all of these questions when it comes to overspend, when it comes to potential softness in demand, and of course a threat of all the advancements that we're seeing out of China as well.
And you really do not want to be a central banker at this point. I mean, all of those variables that you mentioned, and of course, inflation fears with oil prices rebounding today. That's something that the Bank of Japan will be facing this Friday, and we'll be watching the JGB space very closely for that, because those gains in JGBs have been capped by also fiscal concerns here in Japan. We now have reports that the government may be thinking of cutting the food sales tax to 1% for 2 years starting April. What will that do to the fiscal picture here in Japan? will be a key question for bond market investors, for equity investors, as well as we continue to see the Japanese yen trading at that 40-year low against the U.S. dollar. We're watching, of course, the tech sector, given, of course, the AI selling that we've seen. The Philadelphia Semiconductor Index in the U.S. now falling into bear market territory at a time when we're watching some of these plants in the semiconductor hub of Kumamoto Prefecture, where we had this massive earthquake yesterday. We know the likes of Honda, for example, have paused, halted operations at one of their plants. We'll be watching Japan Airlines, for example, for the resumption of flights there as well. But take a look at the Kospi, because it's South Korea where we'll be watching earnings, not only from SK Hynix today. Samsung also reports this week. SK Hynix, we're talking about this with Heidi. I mean, green. Yes, that profit surge of 557%, and you still manage to not necessarily
right? Not happy with that.
Have investors too happy for you. Right now, the gains muted at 2%, and we have seen already the fall for SK Hynix, right? Down about half a 50% or so from their June peak. At a time when the Kospi has also plunged in the previous session, we're now up 1.8%, perhaps a little bit of a rebound from its worst day since March. But when it comes to the Kospi as well, we're down about 60% or so from this year's gains, and the Korean won also trading at those very weak levels of 14.56 and really headed towards 1400 at this point, Heidi.
Yeah, take a look at the reaction when it comes to Brent at the moment. Coming online, a jump of 3.3% at the open after we saw the U.S. repelling the surprise Iranian attack. All of this kind of goes to just how much uncertainty there remains after a few days of what sounded like sort of calming tensions, right? We heard even rhetoric from President Trump saying that he thought there was a good chance that another ceasefire deal could be reached. But now the surprise attack, the sort of re-upping of these fears for the energy market, Brent crude 3.3% higher at the open, adding to that just about 5% increase at one point when it comes to trading in WTI, reversing some of the 14% loss that we've seen over the past 3 sessions where the markets were feeling a little bit better about the situation. We also had sort of elsewhere around the region, Saudi Arabia's eastern region, a second day of Iran-backed
militias. How are they even attacking at this point?
Firing drones at those facilities for oil as well. So a lot of pressure when it comes to the oil space, a lot of concern over what happens with the Strait of Hormuz, as well as some of the tensions over the Red Sea going on as well. Treasuries is an interesting space to be looking at
how
the
they
moment,
even
because
have
there
the
has
power.
just been really not a lot of consensus on how potentially investors and markets will react if there is a surprise rate increase from the Fed on Wednesday. So what we are seeing is that sort of heightened cross-asset volatility in the near term, since some of these market moves point to the increasing vulnerabilities there. So we'll be watching that very closely. When it comes to Australia, we're actually seeing upside of 0.7%. A big earnings day, Rio Tinto. In fact, Rio Tinto shares gaining 2.8%. We had a profit beat for the first half underlying numbers there, and some of those energy names will be boosting that market. But tech, entirely different story at the moment, Sherry.
Yeah, let's delve into the results from SK Hynix, whose record quarterly profit has fallen short of lofty expectations, adding to fears that the AI boom may be slowing down. Seoul Bureau Chief Kat Barton joins us now with more on this. And Kat, we know that SK Hynix is sort of this global sentiment test when it comes to AI hardware. Can you break down the numbers for us, because they still fell short of expectations?
As you say, Sherry, they fell short of expectations, but we're still talking about massive profits here. These are huge numbers, and they've also announced that their capex is going to increase dramatically. We're hoping to get more details on that shortly. They're giving a briefing right now, so we're going to get more information about what's going on there. They're also unveiling some more details of new longer-term deals that they've been signing with key clients. So overall, although obviously they have missed these expectations, as you've pointed out, they're still looking fairly solid. I mean, these are huge numbers, record quarterly profits for them, and they're about to give more details in terms of exactly what this means over the next few quarters.
Kat, it hasn't really helped that we've seen kind of the trend of mega listings in the US calming down after the initial fervor, right, as well. As you say, this is really just
over the 5 days,
about the enormous expectations. But to be fair, a lot of this concern is to do with the competition from China, is to do with how much the massiveness of the spending,
the last 3 months, oil has gone down a lot.
And how much debt is also trying to come onto the market at the same time.
6 months.
You're absolutely right. SK has been hit by those concerns because obviously this week we've seen a lot of, good news in some ways out of China.
Here's when the war started.
It has shaken investors, hopes and made people question should they be pouring quite this much money into these huge South Korean or the US firms that are, spending quite so much when China is obviously, some of them seem to be doing similar things for much, much less. But a lot of the volatility we've seen for South Korea specifically is also linked to quite domestic issues, which is, they approved these leveraged ETFs a couple of months ago, and that has caused a huge amount of volatility for Samsung and SK, with South Korean retail investors piling into them, hoping to see huge upsides. But that also means they're seeing huge swings and huge downsides. So some of this massive, massive volatility, yes, it's linked to China. Yes, it's linked to, cooling on that global AI play. But at the same time, there's a lot of domestic retail investment sentiment going up and down here.
And Kat, of course, we get Samsung earnings on Thursday
Everyone
as well.
wants to use
They've been
those
catching
ETFs
up
I was
to
telling
SK
you about.
Hynix when it comes to the HBM sector.
Yes, you're absolutely right. They've been chasing them for a while, and now they're shipping this HBM4. They've almost, in some ways, tried to pull ahead there. It's both of them are key suppliers to NVIDIA, and we've got to see, more details of those deals going forward. SK had announced, obviously, new deals with NVIDIA last week from San Francisco. So I think as we get more information about exactly how those will play out over the coming years, including massive new investments in South Korea, in building more here and producing more data centers, building more fabs, etc. in future. So we'll have more details of those coming, and then yes, we'll have Samsung results tomorrow, so we can see how both of them have shaken down.
Bloomberg Seoul Bureau Chief Kat Barton there with the latest on SK Hynix, as well as a preview to Samsung's earnings this week. Let's bring in Peter Kim, Global Investment Strategist at KB Financial Group. Peter, great to have you with us. What do you expect to be the impact of these results, both from SK Hynix, lofty expectations there missed, but also Samsung when it comes to the broader Kospi?
About a month ago, maybe I would have thought that this earnings would have been a main event because of the heightened expectations and retail focus. But after the recent sell-off, the earnings would not have that much of an impact because the markets did not fall because of earning expectations. Markets are falling at the moment with the deleveraging of the retail ETFs. So as much as earnings matter, I think for the time being, we just have to watch the fund flows, retail sentiment, and the unwinding of this 2x single stock leverage ETFs.
It's 2 times leverage, not 3 times for the
What's
SK
been the impact
Hynix.
of
Still
those
a lot.
leverage ETFs, and has some of that been flushed out of the market, especially speculative moves?
The amount of leverage ETFs, not just for the single stocks, but the entire DRAM space, not just in Korea, but you have US, Hong Kong, and even
massive.
the UK.
It's like trillions.
That has really made this greed and fear phase a lot more sharper and a lot more extreme. I think you can see over the past 2 months how the speculation has overpassed the fundamental investors, and I think it'll take a while because the scale of the leverage and retail flows that has gone into these products is not going to be flushed out within 1 or 2 weeks.
However,
should be doing good. Again, the fundamentals, if you look back where we were, the reason why they have that tone, fundamentals has changed marginally. A lot of the negatives that's coming out on the sector is because of the price correction that has brought a lot of the negatives coming out and overshadowing the positives.
Peter, I mean, yes, we look at the volatility in the South Korea market, but overall, when it comes to the strength of this economy, especially with these huge exports of chips, why is it that we continue to get this massive pressure on the Korean won? And will this have any meaningful impact also to the investor calculation on investing more in the Korean stock market and broader assets?
Right. currencies matter a lot for the institutional investors. Obviously, the weakening that you're seeing in Japan, India, Indonesia, and Korea, probably the four most weakest currencies at the moment. The currency depreciation of the won, primarily driven by capital flows rather than trade. And even the export companies that really shore up the currency market for Koreans, they are taking a view by keeping their forex earnings overseas. So it is a bit of a smaller version of what you're seeing, how Korean investors, both individual, institutional, and even corporates now, are taking a view because of this momentum you're seeing in currencies and equity market is so strong. One of the reasons why Korean government decided to introduce the single stock leverage ETF is because there was this capital outflow into other markets seeking greater leverage on this semiconductor theme. So it is a double-edged sword. Unfortunately, in this case, for leverage ETFs, it has been a wrong decision, and it's definitely backfired.
Here in Japan, of course, you mentioned the Japanese yen. We're still trading around 40-year lows against the U.S. dollar. Will the Bank of Japan's tightening path help supporting the currency? What can we expect on Friday?
I think Japan's got an entirely different set of problems in the sense that you're not only looking at trade flows, you have for the first time in decades, inflation. If the U.S. is wondering how they can unwind the QE after 15 years. Imagine what BOJ is facing after 3 decades of excessive liquidity and stimulative efforts to try to unwind that through no choice of their own because they have to tackle inflation. So I think Japan's very interesting. I think there is a lot more going on there than even US or anywhere in the region.
I mean, we're seeing reports now that the government wants to really cut the food sales tax. So what are the implications for the Japanese bond space as well? I mean, we have seen JGBs see the immense pressure here in Japan on those fiscal concerns.
I think the currency, to me, is signaling so many different trends. One of them is the fiscal stimulus that I think for the first time in 20 years, we're finally seeing concerns. How sustainable is this government debt growth strategies by governments like Japan? And I think given the geopolitical issues, capital flows being so rapid, I think BOJ will have to watch very closely what the repercussions on some of these structural shifts that we're seeing, not just for the BOJ, but the entire region.
And of course, for the BOJ, what the FOMC does will be very consequential, especially when it comes to rate differentials, right? I mean, this FOMC seems to be a very uncertain one. UBS now calling this the most uncertain imminent Fed decision in about 20 years. The fact that we're not getting that signaling from the new Fed Chairman Kevin Warsh, how consequential will this be and how live could he make this meeting?
Yeah, that's why I was thinking the same thing.
He can take it in so many different directions, and the uncertainty.
We don't know where we can go, but you know he's going to lower rates. He's Trump's appointee.
Into this position, how much was that politically influenced, or how much of it is really his opinion? Nobody knows. I think so. Therefore, the uncertainty of facing the Fed is uncertainty facing the rest of the world, and I'm sure the central bankers everywhere will be watching very, very, very intently.
Yeah, traders pricing in a 1 in 3 chance of a rate hike on Wednesday. Peter Kim, good to have you with us, global investment strategist at KB Financial Group. We have more ahead on the Asia trade. This is Bloomberg.
All right. We made it, y'all. We made it. Good job. All right, y'all. Okay. Let me wrap this up here. Okay. Here's the deal. All right, Japan had a 7.1 earthquake, so they're dealing with that right now. That might have some effect on their the rate decision this Friday in Japan, which will affect our AUD JPY position because in the denominator of that equation is the Japanese yen. There was a SK Hynix who had come out and projected their management during their earnings call, said they're going to get 550% return. It was a little less than that, but I mean, 550% return on profit. I mean, come on, that's still like a lot. But it does add to the fear of the AI slowdown, which has been kind of the theme lately. Let's see, oil jumps as U.S. repels Iran attack on a base. Oil's up 3.8%. But remember earlier, we looked at the long-term chart. This trend is downward since the debacle started. We got, Fed decision tomorrow, but we know that he ain't going to raise rates. That's Trump's appointee. Plus, traders are saying it's only a third chance of it happening. And we just talked about that. Let's see. They approved the SK Hynix ETFs. That's causing all this major volatility. Remember earlier I was talking about how it's better to use a leveraged ETF than a margin account? That's exactly what they're talking about. It's just become so popular that it's affected the underlying index, which is SK Hynix, or the Cosby, which has SK Hynix in it. So we're looking at a period of consolidation of Korean markets, so we're not investing there. Japan's rate decision Friday. It's the first time in decades they've actually had inflation. He said it takes U.S. 15 years stimulus to unwind versus Japan. It's 3 decades. It's got a point. They're cutting food tax. It looks like they're doing some fiscal measures here. Other than that, we got some trends that are pushing the yen. So remember, we looked at the chart. It hit that resistance level. So see these 2 blue lines? We're on a 5-minute chart. So we're looking at here's today, here's yesterday. This was the weekend. And these 2 blue lines, if you zoom out, we have those lines there. So when we're zoomed in, we can see where the area of resistance is. And now I was saying here that let's see, not the chart here. Okay, so these 2 blue lines here are indicating the area of resistance. And remember, in my drawing, I said that. Zoom out a little bit more here. I can't see this very well. Okay, here's my big cup, and here's the handle right here. So the handle is actually going to be in between these 2 blue lines. It's going to bounce around here. This scale is a little off here. It's kind of hard to see, but I expect it to do this. Bounce around, and then boom. I could do it right now. I think it is. I think it's going to do this now. But it could also do this. So, got to be fair here. But I see this. I see this ramping up and then breaking out. It doesn't seem like the escalation with the oil situation is really affecting this trade either. So anyways, here's today. It's been kind of flatlined. It was up today, and then it's kind of just flatline for now. So we'll keep an eye on it, though. Anyhow, So where do you think rates are going to go tomorrow? Do you think the Fed Walsh is going to raise interest rates? Do you think this trend is going to continue? I don't see why not. The fundamentals are there. Hopefully they can end this war and everyone can move on. But that wraps it up. I would recommend that you add to your positions. Hold the ones you have now. But if you can't watch it, then I would recommend you take profit right now and then put a buy stop order. And a buy stop order, if you don't know what one is, it sets an order above the price, and then once the price reaches that level, it executes, it becomes a market order, and then it gets the next bid. So whatever trade it is, whether it's TQQQ, TNA, BABA, MISTR, TNA, I believe that's it, AUD, JPY, of course, all of those, you could put a buy stop order because they're all correlated at about the 90% level. And that wraps it up. Thanks again for your viewership. This is KRISTOPHER, KW Podcast, signing out for today. And I'll see you in the next one. Signing out.